Hey there, this is Jacob Wood with Douglas Elliman Real Estate, and I have for you here the contract signed report for February 2020. Now, right off the bat, I know this data is a month old and it's been a really long month for all of us. So I hope you're happy, you're healthy, you're taking your meds, right? Meditation, exercise, diet, and sleep. Hey, we need all the help we can get. Now, although this data is a month old, I think it's instructive to pay attention to where the market was headed before the events of the past 2 weeks. Now, right off the bat, we see that median closing prices of both condos and co-ops were up year over year. The modal closing prices, the prices where the bulk of transactions were taking place, were up as well, with more condo sales between 2 and 3 million and more co-op sales between half a million and a million this year than last year. Now, these higher prices were achieved by sellers being more negotiable, as we see that the discount from original asking price to contract signed was greater this year than last in both co-ops as well as condos. It always takes about a year in a shifting market for buyers and sellers to get on the same page with value, and they got on the same page this year. Higher prices and more negotiability led to fewer days on market between most recent asking price and contract signed. Once homes were priced well, they found buyers more quickly this year than last year. Additionally, co-op buyers, and co-ops comprise two-thirds of the purchase inventory in Manhattan, were more bullish this year as their initial offers were closer to sellers' asking prices than they were last year. Looking at supply, we see that in the luxury submarket above 5 million, there was between a year and a half and 3 years supply available. And that's to be expected for years in the future as we continue to burn through the glut of inventory. The developers had the bright idea to build all at once. But for the market below 3 million, and 95% of real estate transactions in New York City occur below 3 million, there was between 6 and 9 months supply available. So for 95% of buyers looking for new homes in February, they weren't looking at a buyer's market. That storyline was driven entirely by the luxury market sector. Now, because the market is shifting under our feet, I think it's helpful to look at overall market activity this month versus last month. So in February of this year, we had 699 contracts signed, right? In March, we're going to end up with 689. And hey, the month of March isn't over yet, is it? Looking at the first 2 weeks of March, we saw 382 contracts signed, and in the last 2.5 weeks, 308. And so while the market is being constricted by world events, it's not the frozen market a lot of us were worried about. If I'm a seller and I'm on the market right now, odds are I'm motivated and negotiable. If you're a buyer and you have the bulk of your liquidity not in the stock market but in a savings account where it's been waiting to be used as a down payment, and maybe there's a home you saw last month that you really liked, but you and the seller just weren't quite on the same page with pricing, odds are that's a gap that can be bridged now. Sellers are considering offers now they weren't considering a month ago. So if that's your situation and you'd like to hear more, feel free to reach me on my cell at 917-232-0803. This is Jacob Wood with Douglas Elliman Real Estate. I hope you're happy, healthy, and taking care of yourself.